Ike, what's
Hey,
going
hey,
on?
Max, been a long
Been
time.
yeah, it's been
Yeah,
a little bit. You've been busy slash not busy. You've
I
been making
know.
big life changes, but how have
Yeah,
things been?
what a difference a few weeks makes. Yeah, I've officially retired from the sell side. Spent the last 22 years of my life, thinking about stocks and trying to figure out where the best investments are. And we've talked a lot offline about kind of where the world is going, where bonds going, where inflation's going, and where energy fits into all of that. And
Right.
kind of had this conclusion that from a capitalist standpoint, what is capitalism for? It's there to create income and to allocate scarce resources. And the thing that I found the most of were scarce resources that one, generate free cash flow and continue to do that. And we can go on the energy and oil and gas bent, like all the rest of EFT does about that. But the thing that got more interesting is what's scarce are actually economic projects that are in and around the energy transition and climate tech. And so I've been spending a lot of time thinking about and trying to find places where you don't just like write research and sell ideas around um, the energy transition, but actually go build some businesses around it. And some of
Hmm.
those things are blockchain, some of those things are carbon, some of them are very,
Blockchain.
very nichey.
What?
I know, man. There's an opportunity. Got to get into proof of stake versus proof of
Like
work.
carbon
Some
credits or something? What are you
No,
scheming
there's
on?
a really
Block.
cool. I mean, friends of mine. What's interesting is the oil and gas world is small, and that's like
Yeah.
6 degrees of separation. You know just about everybody. What's interesting is in the media world of what we've kind of gotten into over the last year working together. It's been almost a year since our first recording. It
I
was probably
know.
about a year ago that we talked about doing this.
Yeah.
Um, and
It's crazy.
then in the climate world, it's even a smaller group, and there's just so much radicalism that if you can just bring a little bit of logic and a little bit of scalability, you can actually probably I think I can build some businesses that are going to be really interesting. Um, and now it's just a question of time, and so that's what I'm thinking about while all that's
Do
going
you
on.
think actually? Let me just. I got a
Yeah.
question for you. Do you think that the climate and or ESG movement now, with what we're seeing happening with inflation and the consequences of resource scarcity being readily apparent across the world and the geopolitical consequences, do you think that this is dampening or slowing or changing people's perspectives around this desire to rapidly eliminate
I,
fossil fuels, i.e., sovereignty, right now? Or do you think that
I, I actually
this is
I
not
actually think
doing
that
anything to it?
I think that the energy sector is best positioned to lead in and around what's happening from an ESG, a monitoring, and like truly understanding scope one, scope two, and scope three emissions. And so we've been in the oil and gas space underneath the microscope for so long that we've been thinking about how to reduce emissions and how to improve and measure. And the reality is with the SEC mandate that came out a couple of weeks ago, the tech sector is going to all of a sudden have to start thinking about what are they doing from every one of their data centers to all of the delivery trucks that they're operating if you're Amazon. And so I think that there's this like opportunity of the oil and gas space is generating a ton of free cash, so you've got more opportunity to clean up faster. Talking to the CEOs of all the companies that I covered on the upstream side, you can capture 90-95% of your emissions with a small amount of capital. Like it's just like, and we talked about it, it's like compressor starters, it's pneumatic replacement, it's a little bit of electrification, and all of a sudden you've made dramatic changes in what your whole spectrum is. And we get it because our boards and our management teams have been thinking about it. And the boards and management teams of consumer retail haven't been thinking about it, but I think they have to now, given that the SEC is potentially going to be enforcing scope one and two at a minimum, but maybe even scope three. And so I actually think that there's this accelerator for the oil and gas space of higher commodity prices are providing the opportunity to secure itself in a cleaner spot, particularly on the natural gas side, on some of the, and really you're seeing it with the crisis in Europe. I mean, I think it's super interesting that Germany is going to be trying to import um, LPG and LNG, uh, over, for next winter, potentially to be more and more independent from Russia. And that just secures the U.S. position. So now I think the ESG investing story is, a lot of it is good. The problem is most of the fund managers don't know that they own dirty stuff, and you're going to start seeing more and more reporting around it. And it's not just going to be oil and gas that'll be vilified like it used to be, because oil and gas is going to have the biggest rate of change of improvement. So that's what gets me excited. And then really the thing that I'm focused on is carbon and carbon markets. And so, the compliance markets, the stick is what causes change, but, voluntary markets are going to emerge. And, really it's an enabler for fossil fuels. I mean, all you have to do is see like what Calpine's doing around their power plants and growing EBITDA on the green side, or greener. And that's the real point, is it's the ER on that. It doesn't have to be solar or wind. It can be enabling technologies for the existing projects we already have. And that's where the businesses actually can make real money, and get that additional boost from what's happened on the ESG side. It's this Venn diagram that not everybody else is seeing, that I think that overlap is where I'm going to play.
Well, you're very versed in the space. You're also knowledgeable around energy. You've thought about these topics a lot. You have, well-articulated viewpoints around the nuances here on efficiency and driving, reduced emissions through these things you've discussed. That's not what I'm seeing from like anybody though, right? I mean, you turn on the TV and you're seeing crazy talk from politicians, and vast swaths of the country are listening to these people and they believe what they say. You're still seeing ESG things that are done in the name of ESG. I would say a very high percentage of them, which are the very, very opposite of what they're actually trying to accomplish. So can we get a level of sanity and clarity into this movement, or will we continue to have the mainstream, like what you're discussing right now, that makes a lot of sense and that there's low-hanging fruit and things that we can do, or will it continue to be driven by hysterics and things that aren't actually accomplishing the goals? Because that's the part where I get cynical. It's like, I like what you're saying, but I'm not seeing that a lot of places.
No, I got pretty cynical around it as well. I wrote research and provided market commentary around that, and realized that like that commentary actually just goes into the hurricane of all the noise you're talking about. And so don't spend your time focused on the macro of everybody else in the world, and just go do some micro projects on your own that actually deploy capital and build businesses, and then put up the results, is what I believe is actually the better thing to do.
Scorecard.
And then come with the scorecard, and if things go right, go sit down with Joe Manchin and provide him the data that says, hey, right now you're going to do a project for EV electrification, using the average power grid that costs $400 to $600 a ton for carbon equivalent abatement. Why don't you actually enable this power plant actually to move forward with some degree of capture and some improvement, or enable this midstream company, and give them a credit for reducing emissions, because they are now going forward with removing pneumatics, or all these reserves that are in the ground that need to be abandoned. You've talked about using wells for Bitcoin mining. There's all sorts of sources and uses of these resources that can actually clean things up and actually be a better outcome. Burning flared gas as opposed to venting flared gas to generate power is a great idea. And you all talk about,
but it's markets, free markets driven though, right? Exactly. Like credits and stuff. Some credits have markets, right? Like we've talked about, we've had smart guests on, and I've learned things from them, right? About how these things can work. But then there's also the stick part of it, that's not free market. So I don't know. I like what you're saying, but I just think it has to be driven by something that's an economic benefit to the person who's doing it and the consumers. And if you can align those two things, I think we can change the world. But if you can't, I think it's be very difficult and be a lot of waste, which is the thesis we've had for a year. So
and the world and management teams have sold long tail risk with no value received for it in perpetuity. And so like we've been, supply chain and globalization showed it, hospitals showed it through COVID. Like the long dated risk of not having enough capacity was sold, and then we exposed those risks. Like we never ran out of toilet paper. We ran out of toilet paper that could be distributed in 4-packs and 6-packs because they had, a lot of capacity going into, retail and office space where you have the 24-pack or the even larger box of toilet paper sitting there. And so those are the tail risk. And I think the same thing happened, in and around carbon. And there's a question of SOx and NOx emissions were eliminated through a combination of it was better for the environment, and there was a stick that was there. And Clean Air Act, the only two good things that the government really has done is in the early 70s and in the early 90s with the amendment, but that was a stick that actually accomplished a real goal and eliminated acid rain and eliminated a lot of inherent problems. And so sticks cause changes. There's a small the example that I like the most is a small tax on single-use plastic bags in the UK, led to an elimination of 95 or 98% of all single-use plastic bags there, and nobody's life got worse. And you just eliminated, effectively the bags that I use to pick up dog poop on walks every morning in my retirement. So I'm making 2 uses out of them. But really, why not just go to a multi-use bag when you get your groceries? And those penalties of like, why do you need cheap plastics? There's going to be other ways to refine that into a better plastic that has a better use. So those sticks, I think, make change that makes sense. And I'm not against penalizing some things that were a sale of a long dated risk. So
I don't like penalizing things like that, but that's just me personally. We've beat this a lot. Let's move to I was going to say markets. Like just the world stuff, markets, and then like just worldwide. I mean, we haven't talked it's been whatever, 3 months or 3 weeks, or something like that. Yeah. So I'm interested to hear your take on, and this isn't purely energy, but definitely affects the markets, just like what's unfolded since the last time we talked in Ukraine. It's really interesting. I try to keep up to date with that. I think that has an impact. I think what's unfolding in the bond market with interest rates, I think what's unfolded now in the price of oil and the erraticness of where it's traded. Natural gas, it's crazy. I mean, it's absolutely nuts what's going on right now. The bears in disbelief. But there's a lot we can talk about, and I'm happy to hit them in any order you want. But I'd love to talk the world right now in macro and get your thoughts.
So the one thing you didn't bring up is Chinese demand, I think, and that hits as well with the lockdowns.
China, yes,
it's kind of perplexing to me. I haven't spent enough time on it, but it's clearly impacting oil price, and so you haven't had all. You're effectively war starts, and that causes a rally, and then that premium goes away, and then demand goes down in China and Southeast Asia, and then we have the SPR release, which has just put oil, looks like it's in kind of a bear tape, unless something causes a shift. And so that 130 down to 100, still, I think that we're in a $80 to $100 world for a while. Because you're going to have to refill the SPR at some point, and this Chinese lockdown, what we're seeing around COVID sure seems like Texas has less than 100 people or 1,000 people in hospitals across the entire state now for COVID.
That's
and so
crazy.
Like, it's just wild that seeing the news of Shanghai lockdowns. It's good to be an American.
It's conspiracy-ish, right? People are like, oh, they're never going to let this go. This is going to be like a method of control. And then people being like, that's crazy. That's not what's going to happen. And then you see like what's happening in Shanghai, and there's like drones flying around. I don't know if that video is real, but have you seen that? Where like the drones like flying around?
Yeah.
And they're like, don't, miss your freedom. I think that's what it said. It was like, don't, long for freedom. Quit singing like in this like creepy voice. I was like, what?
No.
It's just, it can't be about COVID, or can it? I don't know. It's just bizarre. It's weird.
It's just weird, but it's causing oil demand contraction, and that's
which you said I was crazy to say that announcements about COVID could cause that. You're like, that's crazy talk, and I didn't say that they would do it because of that. I said that these types of like scares, right? Yeah. Whether it's a real thing or not, just the threat of a new variant. Like, think about it. You're 3 weeks out from midterms, right? And if we just
lost you. I can't hear you, Max.
Am I back now?
Yeah, you're back now.
It cut out. Can you hear me?
Yep, gotcha.
I don't know if my.
Yeah, I can hear you. Can you hear me?
I can't hear you. Hold on.
Uh-oh.
Let me.
All right.
Sorry. All right, I'm back. Yeah, I had to put on airplane mode. Anyways, I went down that path. The whole point is that just even discussion or even like weird things about it. Like, right, you could be, even if like a new variant just gets talked about, the oil market starts to shudder a little bit. So I don't know. It's just interesting. I don't know what's going on over there.
No, it's what I think is interesting in the markets, kind of broadly, that I've spent a little bit of time is on the ag space and the fertilizer side. Just got to think you're going to have a real uptick in fertilizer demand as, you know, Russia and Ukraine feeds a lot of the Middle East and North Africa, and so you're just going to have a pull forward of, if that planting season happens, or what amount of yield you can get, and that cascades into where the U.S. is and where exports will go. It sure feels like food prices are going to go up as opposed to down, and protein prices as well. So that's probably the next thing that will be the shoe to drop of what happens going through the fall and then into kind of the cattle harvesting season and butchering season. So that'll be interesting. I don't know what's going to happen like in Europe as a whole, but if they do reaccelerate, and if Germany, I'll take the over on Germany actually getting 2 years from now or 3 years from now, off Russian gas, because they permit a bunch of LNG receiving facilities and LPG receiving facilities. Like, we'll see if the not in my backyard phenomenon in Europe goes away rapidly because of this war. But man, I sure wonder how that actually happens. It is odd though, the policy statements. Like, I watched C-SPAN this week, and like the vilifying of, we don't believe in fracking, but we want companies to turn on more gasoline production. It's like that, just scary as far as like how our legislation actually thinks. But I posted something about like U.S. literacy is below average, so maybe we're just getting the representatives that we're voting in because we're not spending enough money on education. And I'm actually thinking a lot about HISD and some of the moves they're making around schools and deans and staffing being one of my things that I take on in the next couple months. Just providing some data and doing a little bit of a campaign around it, because schools and education are probably the most important thing, and doing things locally is where I've had the biggest fun and benefit. So
well, this is educational. This is education. I mean, energy education in terms of
I think so.
Getting it out there.
So
and
that's the question, Max. Like, if you think about where you are, what real assets? I kind of tongue in cheek said this online. Like, what real assets would you buy today in an inflationary environment? Like, feels like people want experiences more than anything, and that's going to lead to vacation costs and driving costs. Like, sure feels like people are going to get out and do stuff, which will spur demand. But like, what do you spend your money on today? Like, where do you invest in?
Consumer wise or investment wise?
Either way, like, feels like consuming is the best way to hedge inflation. So, spending money to have an experience. Like, I'm doing pilot training right now because the price isn't going up, and I'm going to have it for the rest of my life. And so getting that training and that experience or education is where I would invest my time and money. But
I'll tell you the things I want. Things I want to buy. I'd like to fix up my backyard. I'd like to do something to the house. That stuff's getting crazy expensive too, but it's only going to get more. I'd like to get. We've talked a lot for years about getting like some kind of camper or something to take vacations that would be easier to do. I don't know if we're just romanticizing that or if we'd actually use it. That's the big if. Those are something consumer. Yeah, I'd probably rent one first. Yeah. But I think like in terms of investment wise, I don't, and then the other things like, we have, our cars aren't that old. I'm not really a huge fan of getting new cars. It's just kind of a suck. I mean, it's nice to have a good vehicle, but I mean, like in terms of like the investment side, I'm happy that I bought a house in 2019, even though I thought it was high at the time. That was a lucky break. I'm also happy to be invested in real estate. We talked about it. I've got the short-term rentals, which I really like for a lot of reasons. I think that I'm bullish on vacations you can drive to, and vacations where you can team up with people and split the costs, because I think that that's powerful. And then also, people just want experience, like you said, experiences, and I think that that's something that I'm bullish on. And then also just the real estate side in general is still a great place to have money, even if interest rates go up. If you have cash flow coming in, that's critical. And you may not get the sale price that you want in the near term because of interest rates, but if you're cash flowing, there are just tremendous tax benefits to real estate. So that is something I love and will continue to look at. And then Bitcoin, we obviously are investing there, not just in the not just in the actual commodity or whatever you want to call it, currency, but just in the mining side, and where we bought some natural resources, bought some natural gas reserves, which has turned out well so far. And then we're also building physical infrastructure there. And again, I know it's not cash flow because it's Bitcoin, but it's, it is income coming in. People say it's not cash flow, but the government treats it as cash flow. So I don't know what it is, right? Like, oh, that's not cash. That's not cash. Well, the government treats it as cash. They tax me like it's cash. But yeah, so we got cash flow coming in off that. And then also there's a natural resource component to it as well. So if we want to send some gas to market, we can do that. The other thing I'm really bullish on in the oil and gas space from an investment standpoint is I think power generation. I think power generation is incredibly bullish, me personally. I think the Permian's running into a wall right now of gas takeaway. I think you're going to see material constraints and curtailments in the Permian. Now, I don't know what that's going to mean for oil, but I don't think people can flare like certainly in New Mexico. So I think if you're a power generator, you're going to have a lot of opportunities to generate power with natural gas, whether that be for Bitcoin mining or just for facilities, right? Like if you have natural gas, it's worthless. And I think Waha will be negative again at some point.
I agree.
I don't know when.
I think there's just not enough pipe capacity being built, and I think there's going to be a call on oil as well. And I don't believe companies are going to regress on flaring and emissions, because a lot of the C-suite, when they added that to their proxies as something that drives their pay, they want to get to the 200% payout. And
so this is a key point. This is a key point I want to make here. So this is ESG, which is supposed to be environmental, social, and governance. The problem with environmental, social, and governance is a lot of times those three letters can be at odds with each other. So you can do one thing for the environment, like say, I want to reduce flaring. And so you put it into these executives' compensation packages that they can't have flaring. Flip side is we have less oil, gas prices go up, poor people suffer because of that ESG mandate. So it's just going to be weird. Like if you can't produce more oil because the gas is curtailed and we could have otherwise flared it, and then that's rolling through and having social implications through that. And we're seeing that with this week of them saying, oh, well, you guys, they're demonizing oil and gas guys. It's like, well, you put constraints on us and you're continuing to put constraints on us. So we'll just see, like, I agree with you. I don't think that they will flare. And I think that will be a constraint on oil growth. And then I think they'll be called greedy and say that they're, all the things they say. I barely listen to that stuff. It's so hard, but you see what I'm saying? It's just an interesting phenomenon where you have ESG things that are maybe helping the environment in some ways, but that may be hurting in others. And then the other thing is that where are those barrels going to get produced? Is it actually going to be a net negative carbon impact like we talked about? But anyway, go back to the ESG topic, but it's interesting because it's just a lot of ripple effects with these different incentives and things that we're doing. So
now the policy decisions and the outcomes, I think, just lead to a higher commodity price. Right. And I think inflation leads to, I think you're going to see higher food prices. I think you're going to see higher ammonia prices, therefore higher fertilizer prices. You'll see higher natural gas. It just feels like that erosion of purchasing power is a tough spot. What also happens in war is the dollar gets more valuable, and so people are bidding up dollars. Dollar's going to break 100. Like it feels almost inevitable, and that just is the other place that you could park money. But it's a negative yielding asset as well. I worry about, like, I was talking to retirees and like my mom, and people that are sitting in a lot of bonds right now trying to get income out of them. Like what do you do with that, like, 100-year Austrian bond that was 0.8%? Like, what were they expecting? That was trading at 60 cents on the dollar, and they're looking at it like, well, what do I do? It's like, well, that was a bad purchase. And so I wonder what the bond market is telling us that just doesn't, because it is always the thing that leads. And Yeah, I've been out of the markets for a week, and I just think it's going to be super hard to figure out where to invest, other than in hard assets and in the commodities. And the
Right.
commodities are cheap. Like and I mean that not as buying the commodities, but even the companies that produce them. Free cash flow is massive, and they're giving it back. So it's going to be I think that's probably the thing that I'm probably going to buy some now that I'm not restricted.
Right.
Being at Pickering any longer.
The macro is crazy. It's like, to your point, we talked about this a little bit before the call, but I don't know. I mean, it's a tough situation. It's damned if you do, damned if you don't, across the board, basically.
Well, no one,
I mean,
unless you're of retirement age, you haven't invested in an inflationary environment like we're likely in. And
right.
the transitory argument around inflation, transitory can last. I mean, it doesn't mean quick. It means it's changing. Well, we've been in a changing environment for a long time, and I just think that there's some duration here that's going to erode value. But we'll see. I'll be nice.
I think it's going to be I think it's going to be a whipsaw. I think that and I think that inflation. I'm worried. Inflation is the most worrisome thing to me, because if you look, because I'm a big student of history, and inflation is not good, and it's something that can really cause havoc and destroy a lot. It can destroy empires, and it has frequently in history. So and the scary thing is that this disconjointment between the monetary and fiscal policy, because I think that the monetary policy right now is showing some signs of soberness because they're scared. I think there's fear in the way that they're talking. And then, well, what happens if these guys suck the life out of the markets and out of asset prices? I think you're going to see a belligerent fiscal response like we've seen, and which then will cause more belligerence in the monetary response. It's just this cycle, right? What are the politicians going to do if they cause a recession or a depression?
Yeah,
they're going to print, right? So I don't know. I'm looking the game theory in this, and it looks pretty bleak in my opinion. I also am confused around how much has been real. Like what have been the deflationary forces the last? I mean, I don't know. It seems like this. People have been predicting this inflation for a while now. It's like, hey, inflation, but we've had a lot of deflationary forces. Like energy has been one. Cheap goods and services out of China and the emerging world has been one. And maybe those themes will come back. The Kathy Woods of the world and others would say, someone called me her the other day, Josh Young called me Kathy. The other day we were joking around. I said, that's where I draw the line, Josh. But no, I mean, people like her and like Jeff Booth, his book, say that, we're actually in a deflationary spiral. But I don't know, man. I just think that maybe we are. Go ahead.
What's interesting, and everything with screens has been deflationary.
Right.
All the other hard stuff doesn't feel like it's that deflationary. And so like the reality is, all communication, all media, information, all of that has been commoditized. The retail space has been commoditized into essentially, Amazon Web Services, which is a huge cash generator, and we used it to build our platform. Semi-monopoly has enabled them to essentially bankrupt every small mom and pop retailer. And people are happy to do it because I can one click and get my stuff delivered, that flew from wherever and burned a lot of hydrocarbons, and then was a rush delivery in whatever truck it was, and then it shows up at my house in one day or less because I've been fulfilled. I think that the thing that has been deflationary is that side, and I'm not sure that continues as commodity prices go up. Like, someone is paying for the free delivery, and I think it's our truck drivers. Really, candidly, I think the reality of trucking and that Amazon unionization was a non-trivial event, and I think there's going to be some pushback of where prices go, and it's not just going to be absorbed by the people that make the goods. I think you're going to have price inflation, and service inflation, because wages aren't keeping up with the cost of living escalations. And so
no wages, you can't get yield anywhere, and everything is getting more expensive. This is
It's not a bad outcome for society. you buy a farm in the Upper Peninsula of Michigan and stock it with MREs and a lot of ammo, and have stocks of gold and put a Bitcoin mine on it.
Have you read the book The Mandibles? Have you seen that? I read it. It's don't. You're gonna go out and just buy gold afterwards.
Yeah,
Such a freaky book. And then it's like I'm not all the way done when I'm at the end when it's like CBDCs and they're putting chips in everybody's neck, and you're just like, oh God.
Now there are two books that I did listen to that we ought to talk about, or read and listened to. So Adam Grant has a Think Again book that is worth, like, as if you're ever trying to decide where and what preconceived notions you have about something, realize that the people who do best tend to have an ability to rethink where their life is going and what they're doing and how they're spending their time and their preconceived notions. And
it's
the
called
other
Think Again.
Think
Again.
Think Again. And
I usually actually read the books you tell me about, by the way. So I'm writing this down. I usually do.
And then Let My People Go Surfing. It's the story of B Corps, and Patagonia was the first one of them, which is a benefit corp. I think there's a real path to impact investing and attracting capital. And so the Patagonia story, Let My People Go Surfing, has definitely some, you'll probably, it's a little left wing for your thinking, but it gives a little bit of the perspective of a private company that was built in and around some ideals, and then it actually resulted in higher profitability. And so I think there's some interest there that actually could lead the ESG movement in the right direction. So those are the two ideas of where I'm trying to think through. Is there a way to attract real capital into real projects that have an impact and do it in a tax and environmentally efficient way?
Bitcoin, dude.
Actually,
listen to that talk I just posted from Alex Gladstein from Bitcoin conference. It's a panel and it's good. It's like it's a woman that escaped.
I'm so impressed with the Empower conference, by the way. It looks like it was phenomenal.
Yeah.
Like they pulled together, as someone that's done events, like it seems like they did a great job. I'm actually going to talk to Colin. Never talked to him. We did a call yesterday. We'll get together maybe in the next week and just try to see what exactly they're doing. But it sure seems like they're thinking interestingly about how to build a business and then how to build events that attract people.
Well, they're building a community more than anything. I think that they're building a group of people that come together and are, there's not the sense of this community building with traditional media and oil and gas. And I think that maybe like you see it with Twitter, and I think it kind of starts with like the EFT, OOTT or whatever, OOPP, whatever it's called. But you have like this ability to bring people together that are like-minded, that share in similar, it doesn't always have to be values, but it's just like, it's just this culture thing where they're bringing people together. And I think that some of what they've done can turn people off. I think Colin has like this kind of FU attitude that may turn some people off, but it gets back to that thing that I've said that, that's probably a good thing for him, right? He's probably wouldn't have got along with those people in the first place, and those people aren't going to champion him anyways, right? And so if you're always trying to cater to everyone, then you end up being around a lot of people that actually don't align with you value-wise. And then maybe, I don't know, there's something to be said about like having your brand and finding your like tribe and then building that as your core of like what you're doing. And I think those guys are doing that, and then they're scaling it in a way. That's not all they're doing. They're doing a lot, but that's some of
That's interesting. I'm going to sit down with them, just kind of talk about things. I've thought a lot about this stuff in the past. Realized I'm going to have to hop in a sec. Do you have any books you'd recommend to me? So
I've just been going down more of the Ryan Holiday rabbit hole after you made me read Courage is Calling. I'm reading Stillness is the Key right now, and I want to download the other one. What was I just put on my wish list? There's another one that he has about marketing. Oh, Trust Me, I'm Lying. That's the one that I
haven't read that. I'll pull it up.
Yeah, it's about marketing and him and all these things that he's done.
Oh, and he was at one of the consumer retail, Abercrombie and Fitch or someplace like that, doing marketing.
Something, yeah.
Before
he did that. But no, if you got to go, that's fine. I got to run today as well. I'm busy, but I think we'll end it is that the macro is nuts. I don't know what to do. I don't know that anyone can tell you clearly what to do with money right now. I mean, obviously, the things I like and my biases. I think energy is higher for longer. We didn't touch on natural gas. Maybe we should. It'd be cool to have a guest on that really is in deep on the nat gas side in the U.S. that can. I mean, I do it for a living, and I'm even like I do it for a living, and I've been surprised most of my career on the things that have happened with natural gas prices. And even today, I'm just like, wow, this is crazy. So those are some themes. Let's do it again. Let's not make it as big of a stranger occurrence.
Exactly.
I know we've been busy, and then let's get some guests on. But no, this is fun.
All right, man. Good catching up. We'll do it
All
next
right,
week.
cool. All right, talk to you.